Welcome to this session today. Indian broking industry, what has changed and what's coming? Since the banyan tree, Indian capital market has been synonymous with its stockbrokers. And now the market is going much has gone much beyond stockbroking, and stockbroking becomes a smaller and smaller part of this entire scheme of things. But this industry is where everybody has always had interest. These stockbrokers have been your friends, philosophers, guides, advisors, all rolled in one. So today is a session, a discussion on how the stockbroking stands. What do we see it going ahead? What do we see the present and probably a bit into the past? Always nice to go there. To help us on this topic, we have some very, very powerful people on the panel. We have with us Mr. Nithin Kamath, founder and CEO of Zerodha. Does he need an introduction? I doubt. We also have with us Mr. Vijay Chandok, MD and CEO of ICICI Securities, Mr. Shrini Viswanath, who is the co-founder and CTO of Upstox, and we have with us Ms. Samriddhi Chowdhary, who is the Vice President and Co-Head of Financial Sector Rating ICRA. So welcome, fellow panelists. Let's hope to have a very interesting discussion on today's topic. So let me make start this discussion with a small question, okay, which is probably the most powerful one. The stockbroking as a business model. All right. We could do look at Kal Aaj or Kal. So if we go back in the 60s and 70s, where the stockbrokers are merely execution services. Truly. Well, so we had the ring and people used to place the orders, and that's about it. To today, now stockbrokers, either directly or through the group company or through the subsidiary, they are doing advisory, execution. They're doing funding, either in the NBFC or in the margin trading books. They're doing wealth management as a PMS part. They're doing mutual fund distributions, everything. So this is the today, and then we have the fintechs who claim to disrupt, but probably everybody is becoming fintech nowadays, and all businesses are effectively technology company who also do some other business. So some thoughts on what do you see today, and what do you see of tomorrow? Starting with maybe Nitin.
Hey, thanks, Uttam. Uh, yeah, no, I mean, yeah, like you just mentioned, right? I think everyone today is fintech, so I don't think not just in fintech but across different industries. I don't think you can really build businesses without tech anymore. Uh, where see, I've been trading the markets from I think late 90s. So what has happened, I think, in the last 20 years is that you now have a breed of brokers who are truly only execution only, like someone like us. While we distribute mutual funds, we're still not really advising any mutual funds. We are just enabling people to purchase mutual funds through us. So so I think whatever has happened in the last 15, 20 years has led to this, right? Which is, be it us or say be it even Upstox, I mean, we are all focusing on building better execution platforms to the customers. Um, so what is the future like? I think there will be more of these execution platforms like us, and there should ideally be also advisory first platforms. I think what India is missing is really an advisory ecosystem, because let on their own, will customer do the right things? I'm not sure. So there is a bunch of brokers who have the legacy, and who are born and brought up with advising people on what stocks to buy. I'm hoping that there'll be a niche that gets built here, which is brokers who build platforms which are advisory first, who are helping customers make the right kind of decisions, and etc. And hopefully we also have an advisory standalone advisory ecosystem, which is again missing in India, which is advisors who are not brokers, who kind of use execution platforms like us to advise on top of them. So I think that's really what I think the future maybe looks like. So which is a bunch of advisory brokers, a bunch of execution brokers, but execution brokers not trying to advise, advisory brokers not trying to compete in terms of pricing or in terms of platforms, and advisory only platforms as well. So.
The regulator also has been indicating very strongly they want advisory and distribution to be separate. Okay, that's a message we're getting constantly. Shrini, would you like to add on what Nitin said, or just add on more on this issue on business models of what's happening to stockbroking industry?
Yeah, sure, no worries. So I think what we had before was generally you couldn't sign up with a broker without getting a little bit of advisory from there. You had to have a relationship manager that was required to open your account, because not only was it cumbersome to open an account, but many people also did not know what to trade. In the last decade and a half or so, we've sort of started seeing the unbundling of services, right? Initially, you sort of saw ShareCon come in the early 2000s, come and create an online only model. And even then, people required some level of advisory to help them walk through that. In the last 5 years, we're seeing a whole new breed of customers who are not necessarily in the larger cities of India, but they're in more remote towns, and possibly it's not easy to get advice and things like that, but they've sort of overcome that hurdle and are still looking to kind of participate in the market, right? And that's where the execution-oriented providers come into play, where it's a pure play execution model. You know exactly what you want to buy or sell, and you're just looking for someone who can do that low cost, reliably. And that's when we saw this whole new breed of brokers coming in who focus exclusively on just solving that one problem and that one problem only, right? Because advisory has gone away? No way, no chance. There are a lot of folks who still look for that advice, who still feel that they can't, understand the stock market and digest it alone by themselves. So that's why even if you look at other countries, it's never that because discount brokers came in or anything that the other brokers were sort of were relegated on the side. They also actually grew by a ton because a lot of folks in discount brokers realized they needed advice, and then they sort of moved into an advisory model. And then I think the second thing that we sort of started happening is you have companies focused purely on execution, like Upstox, Zerodha, and who else, but you also have companies purely focused on just the advisory aspect of it, right? So they help on just the advisory aspect of it, and then they work with brokers who focus on just the execution aspect of it to sort of link that together, right? So that whole unbundling of services has happened with each player focusing on that niche area and trying to get that really perfect, and has created this interdependence, ecosystem where you have folks managing wealth management, some folks who manage advisory, and then you've got execution oriented players. And I think it's come out pretty well so far where we are today compared to 10 years ago. I think it's done a great job of kind of having a separation of concerns, and they all sort of play together to give the consumer the best option that they want.
Thanks, Srini. Uh, Vijay ji, so basically, I would turn it around and say you are into bundling, three in one accounts, very loosely speaking. So I think from what I gather as my discussions with the investors, and one of the biggest things that bank subsidiary stockbrokers bring is the trust factor. All right, I'm sure being a part of a smaller part of as a part of an institutional setup gives a lot of support and faith. So, what do you think? How is your business model playing vis-a-vis the other business models which are coming in as a bank broker or as a professional? What is your inputs, or what do you feel how the markets are going, the business is going?
So, thanks, Uttam. I think one thing is very clear: life is never static. Uh, Lots of changes are happening in the environment with respect to technology, with respect to understanding in the way in which you can imaginatively use analytics and marry it with technology, and even the behavior of investors. I think a lot is changing. Uh, to my mind, the future is not going to remain the way it is just now. Yeah, I completely agree. The way the stuff has evolved, my co-panelists mentioned, and some of the elements of what they sort of predicted or projected forward could potentially be outcomes that can arise. Uh, I would just add two bits to that. To my sense, it's very important to keep customer at the heart of what we are trying to do. And I believe that the customer is eventually coming to the markets to increase his wealth, protect his wealth, make money. You've got to help him in that journey. How you're going to do this? Advice, tools, using technology, and you have to do it his way. It's not like an amorphous one shoe fits all kind of a style. I think you've got to do with great degree of personalization his style. I also sense the generation which is coming forward are digital natives. They are very different from the millennials. Many of the millennials are savvy on technology, but they are still not digital natives. The generation that's coming today, they are digital natives. They are born digital. They think very different. So their expectation is absolutely acute personalization, sharp personalization, n equal to one kind of a expectation. And I also believe that they are heavy into social. So they want to exchange views, they want to interact with one another, they want to, in some sense, like we've seen democratization of markets, participation. I think people want to become advisors. So if you can, evolve into getting that kind of a stuff happening, I think the new age guys would adapt. I'm just borrowing from what we are seeing in China, for instance. I think it's inevitable that we will go that way. So I would believe there'll be a lot of excitement in the next few years. And I don't see this very far away, actually. Next 2-3 years, things will be vastly different from what we are having today. I think even the definition of trust is evolving. You did mention that coming from a banking setup, you offer a kind of an institutional comfort to investors. Yes, that's true. But I think the dimension of trust is far larger than just the comfort. And I think we need to recognize that, because today, when you're saying that you need to be a trusted brand, the customer needs to be convinced. Not only are you going to be doing things safely for him, you're going to be guiding him for the right areas where he should put his money to. But also, he wants to be damn sure that you're doing your bit to ensure he gets what is the best that's available anywhere in the world. So he should feel that, okay, if I'm coming to these guys, not only will my stuff will be safe, that's like base expectation today, but I want to be sure that these guys are up to speed and they're going to give me the stuff that's possible anywhere in the world. So I don't need to look here and there. So we've got a long way to go to reach that level of trust. So we have work to
do. So two things you said. One, people come to the market to make money. My firm is 60 years old, and I wonder. Sometimes I feel half my clients come here just to have some fun. But that's on a lighter vein. But I'm sure that's a topic for investor psychology. Why people do what they do.
Yeah, that's right. They come for fun, provided the money that they want to make is made. Right. Once that barrier is done and dusted with, then you put aside something for the stuff you just said.
So Samriddhi, as I was saying, we are stockbrokers into the business. You are a nice outsider giving a view as a third party, unbiased view. You just did a report on stockbroking industry where we are. Could you like to share some thoughts on how the business models of stockbrokers are evolving as you see them?
Sure. So, if you look at maybe the profile of my fellow panelists, that itself is a reflection of how the industry has evolved. While you have disruptors who've maybe changed the rules of the game, there are traditional brokerage houses who have evolved, who've kept up with the changes and adapted to technology fairly well. So, I guess with maybe the onset of discount broking, I mean, we've seen brokerage houses offer more services, more value add to customers. This could be perhaps maybe trying to shore up the profitability or just to provide like a greater value to clients. This is something that we expect is going to continue. So you are going to have advisory, financial planning adjacent, maybe robo advisory, technology based advisory services. You're also going to have maybe more of margin funding, which is picked up quite well in last 2 years. So this is something which is going to continue. Definitely focus on technology or using technology to better maybe the services that are being provided, the quality of service, that's also something that is going to continue. But having said that, looking at maybe how vast the country is, our demographic profile, there is enough room for the technology based as well as traditional brokerage houses. We are going to have the mix of physical presence as well as maybe a complete digital setup.
Thanks, Samriddhi. Actually, that kinds of leads me to the next question. Such a large country, how many intermediaries do we need? Do we need intermediaries, frankly speaking? And this is a question not only in India, where intermediaries throughout the world and throughout businesses are facing. So, some numbers today in NSE cash segment, which is the largest cash segment, there are 820 active members. That number used to be more than 1,000. The registered numbers are higher. And as we talk to people around, people are shutting shop. They are just unable to meet the regulatory expectation. It's in the last year the cake has gone up. So even if the share of the cake has gone down, people are making good money, which also comes out in your reports, Samriddhi. But that issue remains. Do you think consolidation will happen or shutdown will happen? And does the panel believe that we'll end up with 10, 20, 30, 50 serious intermediaries in the stockbroking space and everybody else will disappear because of sheer economics or regulatory, not being able to meet regulatory expectations? Again, another piece of data, out of this 820 members, around 150 odd members have proprietary business as the main business. More than 50% of the turnover is either proprietary or almost 100% of the turnover is proprietary. And if you take some few niche stockbrokers who just handle a couple of HNIs, are there aren't too many stockbrokers servicing the country. And does technology make it necessary? And taking it forward, why can't exchange service the clients directly? What are stockbrokers doing there? Except that the law requires that the trades has to come to a stockbroker. Uh, what a stockbroker is doing here in the first place? The fact that now that the SCRA is being rewritten in terms of code, I think that's a question people will ask. Ki, kya karna hai? So, any thoughts? It's a very dangerous topic, but I thought this is a right panel to ask these questions. The
Yeah.
same sequence, or if somebody wants to, yeah,
Well, first,
Vijay,
let,
love.
let, let me go. Yeah, I think it's a great question, and I think it's a right question to ask. I think nobody has got a place under the space just because you have some history with you. You've got to earn. You've got to add value. If the entity that we are is not adding value, we have no place to exist. We have to be prepared for that. So today, are we adding value? I think we are adding value today. Will we continue to add value? It totally depends on us, whether we continue to evolve and keep ourselves relevant. If we continue to do what we are doing, there is going to be this question which you just asked. And if you are not able to give an answer, you can't seek umbrage in law. That's not the way stuff works in a system like this. So, right questions to ask. The questions is more for internal sort of soul searching for all of us to keep evolving, to figure out, okay, if this business is now shutting shop or it's not going to be relevant, figure out something else you have to do. There's no other option. So at least that's the way I think. For now, yes, there is value that is being added. At least global experience tells me that so far, even the most evolved markets, the entity called brokers do exist. They continue to exist even now. But I don't think we can take things for granted, because all you need is one more new disruption, which sort of changes the way in which things are getting done. 3D printing has now made manufacturing of certain items redundant. Who would have imagined you can make stuff without having a factory a few years back? But it's possible. So why do you want to say that broking is got a perpetual life? I would be okay. I would be not surprised at all if broking eventually as a concept is eliminated. You should be prepared for that.
So I think why brokers are required is to take the risk on their head, right? Because if there were no brokers, exchanges, the MIs would be taking systemic risks. So right now, essentially what we are is this cog in the machine which takes risk out of the system, right? And unless the regulators can somehow figure to ensure MIS don't end up taking systemic risk, I think brokers will be required. But if say, somehow there was a way to ring fence the MIS from any kind of collateral damage in case of volatility, etc., do we need to be brokers? Not really. I mean, we can be tech vendors or whatever. Right? I mean, you're empanel vendor with the stock exchange, and you get to choose which platform you want to trade on, right? But but yeah, but I don't see how you can, like we brokers will continue to be required. But do we need 650 brokers, retail brokers in this country? I don't think so. I mean, like I think regulation should make it easy for brokers to consolidate and merge and get together. And because today, every time you merge, you have to redo the KYC and onboard the customer again, and it just makes it extremely complex. I think if merging and consolidation was made easier, I think it'll help. I think smaller brokers have to come together and create entities with some USP, like what Vijay was saying, have some kind of value that you add. Now, if the value is in terms of execution only, I think that fight is going to be of who's got a better product, right? And I don't think there's space for more than three or four really in that space, and I don't think India is a large enough market to, I mean, even if you look globally, right, as in even a large markets where people are fighting on pricing and product, there isn't really space for more than, I mean, there is space, as in the guy after the fourth place is probably losing money running the business, right? So I don't think execution, there's even space, like I said, right, for more than four or five. So really, the value has to come in terms of advisory. But like what you said, Uttam, is that regulations are trying to keep distribution advisory separate. So how will broker, I mean, advise if they're not supposed to advise? So what are they really going to do? Question. So yeah, so I mean, that's another, that's a question probably we need to ask the regulators, saying what happens if, all these brokers who can't really compete in terms of execution can't even do advisory anymore. So what is really the role in the ecosystem?
Really?
To quote a few numbers over
Yeah.
here,
All right.
while the total number of brokers might be very large, but it's, if you look, yeah, am I audible now?
Yeah.
Just to quote a few numbers over here. So if you look at maybe say top 20 brokerage houses, these would attribute to over 85% of total active clients on NSE. The total number of brokerage houses would be much larger. The same ratio used to be about maybe say 57, 56% couple of years back. So definitely consolidation is something that is happening in the industry and is going to happen further with the compliance requirements, the regulatory ask, technology requirement is going to perhaps drive smaller entities out of business. We would also see maybe smaller entities taking up like a sub broker position with a more reputable franchise, and this is something that has been happening. We expect this is going to go on. uh, your other point regarding maybe the entire requirement of having brokerages at all. Um, the exchanges right now are handling maybe thousands of brokerage or brokers as clients. The ask for having hundreds of thousands or lakhs, sorry, lakhs of retail clients. I mean, the ask for the system, technology, the MIS, that's going to be much different, and that's a different level of responsibility as well. So I mean, brokers are here to stay. I mean, that's what I would think.
Happy to hear that I still have a future. Shrini, yeah.
I mean, we're looking to, convert a B2B to a B2C, right? If we're asking the exchange to start servicing clients. So even having that transformation as a company is not easy. And of course, you have other benefits like MIS and the other sort of, de-risking the ecosystem by not having one player sort of own it all. I think it's a big reason. I think everyone's brought valid points towards that. And also, if you look at outside India and the US and things like that, sometimes you see it actually working the other way around, right? So the brokers sometimes even act as exchanges by actually crossing their own orders instead of sending it to the exchange. So that is great because it's could be cheaper for the customer. and it's also less load on the exchange. Of course, it has its drawbacks too. And the other end is that, in outside countries, you also have more than just two dominant exchanges. There's a lot more exchanges out there, and everyone has to play fair, and that the best price execution wins for the consumer. So I don't see the concept of sort of, the broker also going away. And I think if the exchange wants to get in and offer, or SEBI says that, the exchange should be also allowed to offer that, I think that's totally fine, as long as everyone has an equal playing field to innovate. Ultimately that's all that matters, right? Um, on the second point of, the number of brokers dwindling down, I think a lot of this is also just because anytime technology comes into any industry, right, whether it's entertainment, whether it's ride hailing, whether it's e-commerce, technology has this effect of sort of giving that winner take all, kind of a thing. And for brokers, I think a lot of them will have to kind of pick and choose, right? If they're running both prop trading and retail businesses, they have to pick where their focus is, right? And if they want to get into retail trading, and that too looking to scale to a large number of clients, it's extremely important to invest in technology. That's step one. And then once you've invested in technology, the next step is investing in products, right? Once your technology base is done. So that level of focus and commitment has to be there if they're looking to sort of get in and compete at the mass scale. I think other things like the regulatory changes and compliance changes are there, but I think the larger headwind for folks is going to be, do you want to focus on being a B2B and go into prop business, or do you want to get into B2C and, invest a lot in your technology and product?
Thank you so much for that. Two points that come in my mind. Nitin made a very interesting point where the brokers, the clearing members, we are kind of lubricants to the system. Like when there's a financial shock or there's a lot of fund flow, they become a sponge where their personal network, their personal resources are available to meet settlement obligations in case of sharp movements. However, the fact that they are lubricants also gives them some leeway over the client assets, and which we have seen some really bad experiences in the recent past after a dull of Shanti. And though the regulator has come down heavily on the security side and kind of cleaned up the system where it makes it almost impossible to do any hanky panky there. Plus, even on the fund side, the monitoring is very sharp. We're unlikely to see any major stupidity in terms of misuse of client assets with the kind of scrutiny we have. But on the other point, if the stock exchanges decide to be stockbrokers, why can't the stockbrokers try to be stock exchanges themselves? Wouldn't it work both ways? This was the last discussion paper. Where we say India doesn't have sufficient stock exchanges and intermediaries. Let's have more of them. Let's have fintech company running stock exchanges. Well, that will be a very interesting discussion. Probably a full panel discussion we can have on this topic. But moving ahead a third part, regulations in the capital markets and how it affects stockbrokers. Regulations can make or break business models overnight, right? And our regulator is a very powerful regulator who is not scared of using his powers once they believe that this is in the interest of markets. If we talk about intermediaries being disruptors, our regulator should be called disruptor in chief, because if they see that if this disruption is going to lead to some benefit overall, especially from retail investor point of view, they won't think twice. They move ahead. You may keep screaming and shouting and crying out bloody murder, but nothing's going to change the mind. Do you think please be politically correct if you want to, but please do give your mind. Do you think that Indian regulator is just right, probably a bit overdone on regulations or micromanagement, or is too less, they need to do more? Or can I dare you to speak something on this topic?
Yeah,
Anyone can take
yeah,
this.
yeah. Tricky one with them. So, no.
So I could go on this.
Sure.
Yeah, Vijay.
I've had the privilege of actually witnessing regulatory thinking across industries, broking now, but earlier in the banking side, and not just within the country. Because as a part of the person heading the international business, I was overseeing almost 16 countries where we had a presence. So it was OSPI in Canada to Bank of England in UK, the US regulator in between, and then Hong Kong, HKMA. So Singapore as well. And these are damn sort of advanced regulators in terms of their thinking and in terms of their approach. And this was at a time when we actually just were coming off the global financial crisis 10 years back. So that whole period of transition, I was dead square center facing them. And let me tell you, when the regulations came the way they came, there was like complete, the industry was in a complete disarray, because the stance taken, not just the text of the regulation, but also the behavior of the regulatory sort of system dramatically changed, and it changed vertically in a very short period of time. So there was a lot of pent up, I would say, feelings within the system, within the banking system globally. But nonetheless, I think the regulations that have come, initially people felt, it's not going to work. It's too much of an ask. ROEs are going to plummet in the banking system, and so on and so forth. You're 10 years into these regulations. It's only gotten tighter in the last 10 years. It's only gotten tighter. And ROEs have bounced back. The banking system is far more stable. Today, investors say that, COVID came, COVID is going, hopefully. And you've not come across an accident. It is testimony to the kind of thinking that the regulatory system is doing. I think likewise in India, I have seen, when I contrast the thinking of regulators, the Indian regulator has been, I would say, far more proactive than what we've seen. The extent of foresight, now with the benefit of hindsight, you can say it was foresight, the regulatory systems have got, has ensured that, we have not really gotten stuck in any of these various sort of accidents that have happened globally. And in that context, to my mind, whenever new regulations come, and lots has been coming in our industry in the last few years, and I'm sure it's not ending anytime soon, it does create feelings amongst players for sure, because it does have a short-term impact. But I think a good way to think about it is that the point that you said, they eventually land up for the good of the customer, for the stability of the market. And all that becomes evident in the medium term. I was actually checking out various regulations which have come in the markets in the last few years. And every time it came, there was that, there's going to be a big impact and so on and so forth. Yeah, 1 quarter, 2 quarter, yes, we did see. But you take a trend and you'll just continue to see that kind of a growth momentum. That's because so much of under penetration is sitting within the country. So that comes and takes shape and fills it up. So my view is that anything good for stability, preventing shocks, good for the retail customer, eventually in the medium term plays out well. And I've seen it in India, I've seen it outside India. Very similar responses across industries, but eventually it plays out. Yeah, depending on the nature of the regulation, sometimes few quarters, sometimes longer, but it does play out. But I think the important thing is to embrace it sooner than later, rather than trying to resist.
I have to add here, we are as Brokers Forum, we are member of various international bodies, where the securities associations of various countries come together, and nobody is happy with his regulator. It's global. So when you see other people's pain, your pain starts feeling much lesser. Not only that, yeah, the Nithin,
Yeah.
yeah,
No, the thing is, we as a business have benefited significantly in the last 10 years with every new regulatory change. Right? We came into an existence in 2010 because the short margin penalty rule got introduced in 2009. Because I wouldn't have started this business if the short margin penalty rule wasn't there. Right? Short margin penalty was, if overnight you don't collect span margin, at least there's a penalty applied, right? Because until then, brokers could allow customers to hold positions without collecting enough margins, right? So, and it didn't make sense to disrupt in pricing if someone could give so much more leverage on overnight position, right? Once you knew that the risk is kind of uniform across brokers, you now knew that you could now play on the pricing because the risk is kind of similar to all brokers, right? So, and from then onwards, every new regulatory change has actually helped business like us. I mean, maybe all of us on this panel, it must have helped, in some way or the other. Even when this recent GameStop whole incident happened in the US, right? And I recently written something about comparing both the markets and how our markets are probably exponentially better for the consumer uh, uh, as compared to the US market. It's supposed to be a lot more developed as such. But that said, uh, does regulation over regulation stifle innovation? It can. I mean, right? As in, see, at the end of the day, we are all trying to expand the markets, right? We just have we probably have 15 million Indians who invest in the market once a year, right? So all of us on this panel, we are all thinking on how do you take this from 15 million to say 30 million, 45 million, which means that you have to be innovative, and sometimes over regulation stifles innovation, right? And but the problem is again, there are brokers who've been around for 30, 40 years or more, right? And regulation is made similar for everyone, right? As in maybe say we should think of two classes of brokers, right? Like I'll tell you, if we do 5 million orders in a day, maybe 100 orders happen on a dealer terminal, right? Which is almost zero. I mean, we could actually tomorrow morning I could get up and say, what, we're not going to take any dealer orders, right? But a lot of these issues that have happened in the industry has happened around almost wealth products, missold wealth products, right? As in dealers or relationship managers, mis-selling to customers and over trading, unauthorized trading, and all of that. When a broker like us, we don't have a scenario for something like that to happen. Should we be subjected to the same regulation where something like that can go wrong, right? So yeah, so maybe two classes of brokers. One who can't access customer accounts at all, right? As in the sense, if he has no access to place orders on behalf of a customer, maybe have a certain type of regulation for him, create a new category of membership, or maybe, I mean, it's just an idea. But otherwise, I think every time there is a small incident, we are all waking up in fear, saying, "What is this new regulation that's going to come?" Which we'll all have to adjust our systems to, right? So yeah, so that's what I think.
I think these are all very good points here, and a couple of things I think anytime some new regulation comes in that, the margin requirement or you got to drop your exposure, everyone is, jumping up and down, and not just brokers, it's also consumers, right? People who actually use that very well. But then I think over time, as, Vijay rightly mentioned, it sort of stabilizes itself in the medium term, and you sort of see the volumes pick back up and consumers getting used to it, and it goes on. You know, what is the right balance between risk and also, making sure that the system is running smoothly? We'll never know the right answer, but I think so far it's going in the right direction with what the regulator is doing so far, right? I mean, we've never had any major incident to the system, and I think they've done a good job so far, owing to kind of the business growth and things like that, right? Apart from the sort of margin and sort of securities aspect of it, I think a couple other areas which have been significantly led to, I think, huge participation in the market. One is a KYC requirements, right? So when we started, in about 2012, a customer had to send 31 pages, signed documents in each and every page to open an account. And if there's one signature that's slightly off, then we would have to mail that form back from Mumbai to wherever that person is, pay the postage fee. That person would then sign that and then send it back. I can't imagine a world like that anymore. And now it's with all the digital KYC that has been made legal. It's just, it's been day and night, that sort of change. I'll go as far as to say that, some of the things that the regulation has done in terms of payments and things like that is better than other countries, right? Getting something like UPI approved for, IPOs and for funding your account. I mean, that sort of real-time money transfer, I don't even think that's widely used in the US. Even in the US, it takes several hours or even days to transfer money into your account. And here in India now, we're so used to just using UPI and just instantly funding that and moving it forward, right? So kudos to them for sort of embracing that, sort of seeing the innovations done on the payment space, innovations done by the government, and then linking that and saying, okay, how do we sort of bridge all this together to make a better consumer experience? But yeah, I mean, anytime any regulation comes in that sort of, uh, we feel that adversely affects us, I think it's just a matter of time that you got to wait it out, and you'll sort of see things come back to normal after some time.
Before I come to you, Samriddhi, let me push my luck here. Look at how India has grown from 1991 till date. Look at this way the GDP has grown. Have our markets really grown as it should have? If I say, for the sake of argument, the regulator has done nothing for the market, he just kept on putting roadblocks. It is the sheer force, the natural force of the market that it kept on increasing and finding its way. All right. Would Could that be a fair argument? I don't know. This is something probably we should all sit and wonder. Uh, because often the complaint I hear, it's that regulator plays the regulatory role well, but on the developmental side, the regulator is not very enthusiastic. Or maybe it's a false thinking, and then it requires some image change from regulator side. But I'll stop at that. Samriddhi, you want to add something on this, or we can move ahead?
I think if you consider maybe the accidents that happened in last couple of years, I mean, not just brokers. I mean, we've seen with clearing members as well. So if you factor all of that in, I mean, these steps were much needed. And I guess if you look at a medium, longer term point of view, definitely it's going to add maybe say more discipline in the industry. It's also positive from the investors' point of view. Into restore investor confidence, make them feel slightly more secure about where their money is. So there are going to be teething issues. I mean, as Vijay ji also mentioned, we have seen brokerage companies adapt to changes in the past. Of course, in terms of the compliance requirement which is there, maybe access of funding which might become an issue. Smaller entities, certain entities definitely are going to face challenges, and how you evolve your technology to be able to manage this, comply with the ever-changing regulatory guidelines. I mean, that's definitely which is going to remain important.
Right. I'll move to my last question for the day. Looking in the future, so we are capital market participants. We are used to the terms long term, short term, medium term, investing, value buying, dun, 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 dun. But let's talk about today's topic is the broking as an industry. So I would like you to share some dreams. All right, the not 20 years, the 30 years, because it's not possible. In fact, I'll quote my dad who says, "If Uttam, you were to go into in a coma and wake up after 10 years, you'll find the market totally changed." And this happens every 10 years for those who have been long enough there. But the basic thing will remain the satta, the buying, the selling, the teji mandi, that will remain. But the way of doing things will keep on changing. So, if I could peek into your minds and take a feedback on what do you think after 10 years will be, oh my God, it's so Chinese. This is something totally out of blue. Or let's say uh, something like, would there be T plus one or T plus zero or real time? Would there be direct market access coming to the way that is there in mutual fund direct or through intermediary, or like even in NPS we have that? Or do we see the IFSC, the GIFT City going crazy? Everybody's setting up PMSs and stockbroking there. Forget India. The world is my stage. The liberalized remittance scheme is the Indians investing and owning the entire world. I'm going and setting up my PMS in IFSC, and I say, yeah, this is my Mongolia fund, and this is my Vietnam fund, and this is my no, no, no. Oh, forget India. Let's take over the world, or anything. That's often I sit and dream and I ask people, boss, can you dream? And if because if regulations don't stop it, Indians will do it. Right? Indian businessmen have worked for the last 70 years in spite of government, not because of government. But it's getting better and better as the government gets more progressive, as the bureaucrats get more progressive. I think we'll all come on the same side. But a penny for your thoughts. But this time I'll just change the sequence, starting with Vijay ji and then Srini and then Nitin and then Samriddhi. for your what's your thought for your next report? So in that sequence, please.
Yeah, thanks, Uttam. I think I did allude to some of the things when I spoke earlier. So as we think about the future, I think a new generation is coming. This generation is very digitally wired. It's limitless in thinking. A person sitting in Bilaspur is engaging with somebody in New York as much as anybody else who's sitting in Delhi talking to somebody else in Russia or somewhere around there. So they are pretty connected. Their thinking is global, the way you said, and therefore I would believe it's got, yeah, there will be probably convergence of markets. There would be convergence of even asset classes. So people would flip between commodities, the cryptos. Eventually, it will come. Stocks, a bunch of funds. The nature of funds are becoming more ETFs. You have people like small cases virtually becoming advisors in funds. So the whole industry structure is going to become very democratized. For all you know, there could be, smaller cohorts of fund managers who could have their own fan bases, who would be running portfolios, and maybe he does it digitally. He says, okay, I've got 75, 100, 500 followers, and I do my advice, I do my research. Information is very easily accessible. So I would believe that it will be very connected, very social, very across asset classes, very different format, not in the current format. That's how I believe it will happen. A lot of gamified, learning, education will have to get gamified. People are not going to be sitting, listening, reading, maybe a combo of stuff like that. And I don't think all this is very far away, maybe 5 years, less than that. It's already happening in China, so not very far from there.
I think those are great points, right? So I think definitely, Uttam, to your point, if someone wants to invest in a mining company in South Africa or a clothing company in Amsterdam, my dream is that that is possible, right? The GDP of our country is growing. The amount of wealth that's being held by Indians is growing. And even not just within the country, but as a relative share of global GDP, it's growing, right? So, why not use that and give that ability to own companies that are possibly not based here, right? If as a consumer, I feel that there's a company that's based outside that could potentially, get a better ROE or ROI on my money, should be able to do that. And I think it's great, the fact that you're able to then use the money earned here to then also buy foreign ownership, which is something that we've never seen before in our lifetime happening at a retail scale. So I think that's something that would be definitely great to see. And the other thing is, to Vijay's point, I would love to see the sort of see, we're at that cusp right now where there's not a lot of people actually investing when you look at the proportion of the total population, right? That is going to start changing now. We're just at that beginning inflection point right now. This is not the end all. As that number grows, you're going to start seeing some of these people turn into from novice traders to becoming deep experts at what they do, right? And the hope is that some of these deep experts actually build a presence and build businesses for themselves around what they've learned, right? It shouldn't be that the advice you get has to come from someone with a fancy degree on TV telling what needs to be done. No, it has to be something. A lot of these things today are self-taught, right? I mean, entrepreneurs today, many of them are self-taught. And then I'm hoping that, the area of securities analysis, fundamentals of stocks, and then doing that is actually something that's democratized and spread out rather than held by a clutch of few people who own that knowledge. So those are my two things. I mean, let's, if you want to buy something, any asset, that should be made available. And number two is, let's break and democratize the ability to kind of, analyze and dissect and even advise, and the whole aspect of advisory out to the masses.
let me take one by one. T plus zero is going to happen. Okay, I mean it's just a matter of time, right? I mean, yeah, it'll be first T plus one and then T plus zero, but I think T plus zero is on its way, maybe in the next 5 6 years. To what Srini was just saying about allowing customers to buy assets from around the world, I think India, as long as they're going to have this deficit, they will make it tougher for money to be sent out, right? As in, like we now have a tax collection at source for remitting money, which is, which can't, there can't be anything tougher than that if you want to send money out of this country, right? So yeah, if it picks up, I have a feeling it'll become tougher to send money out, like how China has made it extremely tough to send money out of the country, which means that crypto also may not happen in the next 5 10 years. I mean, because that's again, government losing control of the money. And but I think like uh, there won't be 650 brokers. There will be 50, less than 50 brokers. But I think there will be at least of tens of thousands of advisors, right? I think one of the things that see, SEBI has put in the right kind of enablers in place with this RIA rules around RIAs. I think what isn't in place is how does this RIA generate revenue, right? Because today, as an advisor, if you want to collect fees, you have to go to the customer and ask him for a fees, right? Whereas in the US, you can actually take it from the asset under management itself, right? I hope one of these days, SEBI wakes up and says, you know what, there should be some kind of a tripartite agreement between these 50 brokers and the customer and the advisor, saying that the custodian of that asset can collect some sort of fees for advisor and pass it back. Because unless there is a way in which an advisor can have some kind of, there has to be some clarity in terms of, what is his cash flows, etc. If there is an advisory ecosystem will mushroom in this country. I mean, we've had in this whole rush in the last 4 5 years, I think there's this new quality of new kind of people coming to the markets who are higher quality, very professional. They spend a lot of time on social media sharing knowledge, so they've gotten better. Like I track a bunch of such people. So like what Vijay said, what Srini said, I think there are going to be these advisors who will, I'm hoping at least, maybe it may not happen, but I'm hoping that it's advisory first, because clients let on their own end up doing mistakes, right? And you need professional advisors to be making their customers professional, right? If because people, like Vijay said, don't really have the bandwidth to sit and read, books and etc. Uh, and today's world, we always have this distraction called the mobile all the time, right? I mean, does someone read finance or does he watch Netflix, right? I mean, so it's and also the thing about games, what we have seen, we've tested a bunch of things. As soon as the what is at play is not real, there is no interest, right? I mean, the reason people come trade the market is also because it's real money, right? As in, I mean, whatever little attempts we have done or we have seen happening in terms of demo money, it hasn't really taken off. So yeah, so I mean, these are some of the things I think.
Samriddhi, you're ready for your thoughts? Yeah.
Uh, I would say maybe like we are already on the path to that, but a wider and maybe easier access to various investment opportunities or methods, uh, a more sophisticated, much more evolved advisory service or advisory system, and a net significant jump in share of wallet of financial products in household savings. I mean, that's is going to actually tell the truth. So
Right. So we have had a very interesting session today. Tried to push you guys to really share your thoughts, and you've been kind enough to do so.